Hi there, welcome to Kneppy Invest, and welcome to my pursuit of high quality companies that are not listed on the ASX, primarily focused on the Tokyo Stock Exchange, London Stock Exchange, and the Nasdaq. And in today's video, we'll be looking at a company that is listed on the Tokyo Stock Exchange called Lasertec. Now, the reason I'm doing a video on this particular company, and the reason you might consider this company high quality, is because it satisfied my high quality screener, which I have called the rule of 10. So I'm looking at companies that have revenue growth over the last 5 years above 10% per year, return invested capital and operating margins 5-year average above 10%, companies that have market cap above $100 million and excluding mining companies. And then what I did, because on the Turkish Stock Exchange, 124 companies satisfy this filter, by far the most on any exchange in the world. So maybe ignoring the Tokyo Stock Exchange has been a detriment to my investing. But what I did is I went through this particular, and this is all listed by market cap in US dollars. I just went through this and I looked at revenue growth, return invested capital, and operating margins, and I just picked out 5 companies I wanted to talk about. And down the list, we have Lasertec, semiconductors and semiconductor equipment. Had a look at the revenue growth, return invested capital, and operating margins 5-year history. I just went, oh, I have to talk about this particular company. So what I'll do is I'll briefly discuss what this company does. And at this point in time, I have no idea, except there's something to do with semiconductors. And then we'll have a look at the financial history, financial metrics, why this company is high quality. And then we'll have a look at the chart. And I actually have not had a look at the chart yet. Okay, so let's have a look at what this company does. State-of-the-art solutions through rapid product development. Looks like they build pretty big machinery, but that doesn't tell me much. Let's have a look at some of their products. You can have a look at their company. Sometimes they will mention what they do in the company. President's message, corporate philosophy, business and core technology. I'm wondering if they have something to do with lasers, which will make this company even more exciting. I suppose that's another reason why I picked this company, Lasertec. Just sounds awesome. Lasertec. Company overview. Yeah, let's have a look at this. Well, that's not what I wanted. Description of business, although they do have a description of business there. Founded 1960, develop, manufacture, sale, and service of the following products: semiconductor-related systems, FPD-related systems, laser microscopes. That's probably why they're called Lasertec. They manufacture and sell laser microscopes. What's a laser microscope? I have no idea. Okay, let's have a look at what Physical AI says about this company. They develop, manufacture, sell, and service semiconductor-related equipment, laser microscopes, and flat panel display-related equipment worldwide. The market cap of this company is about 10 billion US dollars, or 1.52 trillion yen. In the end, founded in 1960, and the CEO is Tetsuya Sendoda. I definitely mispronounced that. Okay, now let's have a look at this company's financial metric status. Okay, so market cap, yeah, as I mentioned, about 10 billion, I believe. Yeah, about 10 billion US dollars, not American, not yen or Australian dollars, US dollars. Okay, so looks like this company has not been listed for more than 10 years, just based off the lack of revenue and earnings per growth over the last 10 years. Doesn't have when it listed here, but we can see just by looking at the chart. Shall we have a sneak look at the chart? No, we won't do that yet. Okay, so revenue growth over the last 3 and 5 years, spectacular. We're talking about above 40% revenue growth over the last 3 and 5 years, and earnings per share growth above 50% over the last 3 and 5 years. Wow. Wowzers. Exactly what you want to see for a growth company. They even have a dividend yield of 2.1% and a payout ratio of 35.1%. Could that suppress growth in the future? Possibly, but it's not on the high side. I would prefer the payout ratio to be a little bit lower, but I'm being a little bit semantic. In fact, their dividend growth is 50.6% over the last 5 years. So they are still growing, not only their revenue, earnings, but also their dividends. So interesting. Okay, I just saw something really interesting as well, P ratio. Oh, no, not going to talk about that just yet. Okay, gross margins 59%, operating margins 48.8%. That is a 1-year number. I'd like to have a look at the 5-year history. And return equity, return invested capital, 46.6% for return equity, 25.7% for return invested capital, 5-year average. That's also pretty big. Looks like they do have a little bit of debt, but no. They have no debt. They have zero debt and just cash and no debt to equity because they have no debt. That's also our mwah, mwah, mwah. So lots of mwah, mwah, mwah when it comes to this company, Lasertec, plus the name. Mwah, mwah, mwah. P ratio 18.6. What is happening here? Also, the valuation next 12 months P ratio is 22.5, suggesting the company's not growing. That is what that says to me. So maybe this company has hit a little bit of a weak period. Don't know, but that P ratio looks interesting or compared to the growth this company experienced over the last 3 or 5 years. So there is probably something happening with this company right now. A bit of lack of negative or lack of positive sentiment. Some bad news, don't know, but that P ratio does look intriguing. Okay, so what I'm going to do now is just have a look at the financial history. And I probably should do this before I start recording, just so I've got it there. I might do this for the next video. And what I'll do is we'll have a look at quite a few metrics, including revenue, income, gross profit margin, operating margin. In fact, we can do that now. And what I'll do is I'll get rid of the margins and just have a look at revenue growth and income growth or profit over the last 10 years. And this is exactly what you want to see. This is exactly what you want to see. In fact, this company's revenue has gone from 150 million. By the way, this is in US dollars. I'm hoping he gets in US dollars. Good, good. This company's revenue has gone from 150 million US dollars to 1.7 billion, and the profit has gone from 31 million to 590 billion dollars. So we are talking about pretty significant growth in both of these, and profit has been growing at a greater rate. Not much, but a greater rate than revenue. So I would say also the operating margins have increased over time. This is the sort of increase in revenue and income I'm looking for. So that makes this company even more intriguing based off their PE ratio. Now, what you could do is just have a look at do they report quarterly in Japan? I have no idea. Looks like they do. Now, this is a little bit more lumpy. So this is sometimes why maybe just looking at quarterly numbers is not the best thing to do. I mean, look at the yearly numbers. But we're not seeing any short-term weakness. In fact, if anything, we're seeing some pretty good quarters. There was a weak quarter there, March quarter, but then it's come back straight back to record profit quarter. So this probably might show you don't react to one slightly negative quarter. Anyway, so that is the quarterly numbers for the company, but the trend is there when you have a look at the yearly numbers. Now, as we turn attention to margins, I would assume this is gross profit margins. Not much change over time. Now, I might have been a little bit nervous because from 2016 through 2024, margins or gross profit margins had dropped from 58% to 50%. And in the last year, they've risen again, back up to 59%. So maybe a little bit of a red flag there until last year. Now, I'm assuming, based off the growth in the profit versus revenue, that operating margins have been increasing. And yes, they have. In fact, they've gone from 29% to 48.8%. And the question becomes, how much further can operating margins increase from here? Is this the limit? Although maybe when it got to 40%, people thought that was a limit. And now it's at 48.8%. So how much further can operating margins go from here? Okay, so now what I'm going to look at is, we'll have a quick look at cash flow. So operating cash flow and what's the other one? Free cash flow. And just to see, the history of this. So you can see there's 1 year there in 2022 that this company has negative operating cash flow and free cash flow. And so when we have a look at valuation metrics like EV to free cash flow or free cash flow yield, there will be a bit of a blip in 2022. Last year was really good, a really high level of free cash flow for this company. Massive record, by the way, double any other year. So that could be a one-off. That could be a one-off. Possibly a one-off. And this could be the reason why the PE ratio looks so low, because of what we saw in the last year. Maybe the market is not expecting, or maybe that was there was a really good year because of a one-off. Yeah, there could be reasons behind it. And that could explain why the PE ratio looks quite low because of one-off in 2025. Next thing I'm going to look at is, we'll have a look at return on invested capital or return on equity fairly quickly. We could look at one of these, although there was a bit of a difference between the two. And what we want to see is exactly what we see here. We don't want to see both of these metrics decreasing through time. That could be troubling. But what we see here is they have actually increased over the last 10 years, from 15 to 20% in 2016 up to 40 to 47% in 2025. Now, yeah, there's no red flags at all right here. This is a quality company just based off this, just based off that. Okay, now valuation. Now, before we have a look at valuation, I'm interested to go back to profit and revenue. And I'm just going to have a quick look at the income statement. I'm just going to have a quick look to see if there was any sort of one-offs in 2025 that could explain this pretty big increase. I am not seeing it. Not seeing it just yet. So there was that increase in gross profit margin. In fact, they increased some of their spending, like admin expenses, that sort of thing. So it was really, it looks like a nice increase in revenue plus an increase in margin saw the profit really balloon up. So no significant red flags or no one-offs that explain the increase in revenue and profit in the last year. But maybe the market is like skeptical that that continue for the next year. Okay, now on to valuation. All right, so P ratio. We look at P ratio. I'm a little bit dubious that free cash flow yield and EV to free cash flow would be any good, but we'll have a look at that just in case. And we'll just have a look at P ratio first. This should be okay. And yeah, it's at 17.52 currently. And this is on the low side. This is lowest it's been since 2017, or 2016, when this company looked, well, I wouldn't say looked cheap, but back then, I probably wouldn't have said this or called this company high quality. This is sort of like the turning point in the company, 2016, 2017. And the P ratio right now is at those levels. In fact, it wasn't that long ago, the P ratio of this company was 180, although that was during the one bad year. But anyway, so just based off this, maybe there is some value to Lasertec. You have to delve a little bit deeper. I am wondering why it's this low based off the growth. If you have a look at free cash flow yield, what we want to see here is high level, and it is at a high level at 5.11%. So even this looks attractive. Free cash flow yield for this type of company has been growing 5.11%. That does look interesting. And EV to free cash flow should be like that as well. Although, yeah, a lot of lumpiness. I expected this, so I think we can move on to EV to EBIT, which sort of smooths out the lumpiness in free cash flow. And yeah, just like P ratio, it's at the low end, 11.36. Ooh, I think I want to delve a little bit more deeply into this company. Why is the valuation of this company so low right now? It sort of doesn't make sense to me, but I haven't delved that deeply into the company. There could be some reasons. So let's have a look at the chart. Now, this is the weekly chart for Lasertec. So it goes back to 2012. Actually, no. I was going to say, yeah, back then, I was going to say, I wasn't sure when this company listed, 2012. And 2016, yeah, there was no evidence that this company was high quality at this point. We didn't have enough evidence. And I'll be honest with you, if you have a look, by the way, share price has gone from 300, 400 yen to 16,500 yen. So the significant growth in this company has been quite extreme since it listed. And in fact, there was a lot of interest in this company from 2017 onwards. And in fact, the share price got to 36,000 yen, pulled back significantly in 2022 during the increasing interest rate period. Went to a high of 44,000 yen not that long ago. We're talking about May 2024. And the share price has more than halved since then. So that's probably my big question is why has the share price halved since then? Share price is now below the 200-week moving average, has been below that particular average for quite a while. We're talking about over a year. That is or could be a little bit concerning, but if you do think this company still has significant growth moving forward, maybe this company is looking really cheap. Maybe, yeah, maybe. That's really interesting. And daily chart. I don't mind this daily chart. I'm going to tell you why. So the share price had been in a downtrend for a bit of time. Share price found a bit of and the share price popped up on the 24th of June, 13.3%. And there was really big volume during that period. Now the share price pulled back significantly. Now on lowering volume, you can see how the volume just lowered during that period as the share price pulled back. And we're starting to see some big volume coming in again. So I really think between 14,000 and 16,000, there is a bit of support for this company. And I don't mind this chart at all. I'm going to put this company onto my watch list. Now, I've been getting confused between Lasertec and Adventus. I just did a video on Adventus just before this, and Adventus looks really interesting as well. So I've just discovered two companies that I want to take a closer look at, Adventus and now Lasertec. Go Lasertec. Okay, that's all I have for this particular look at Lasertec, a company listed on the Tokyo Stock Exchange that looks really interesting, particularly the valuation compared to the growth of the company. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this company. Have a good day. Bye.